All right, back again for the third and final video of this week. It is Sunday, April 6th. It is now almost 6 p.m. Eastern Time. And as I said, this is the third video. If you haven't done so already, check out the first two that I made. Um, Unfortunately, I'm just limited for time on these videos until I come up with a better solution. But in the last video, I was talking about Home Depot as I was running out of time. So I want to, start off with Home Depot again. So Home Depot had a head and shoulder pattern, all right, that I basically have been trading since the break of the head and shoulder neckline right here. All right, it sold off from 380 down to 344, 345, and then it's been kind of sideways, chopping upwards for the last few weeks, and almost trying to fake people out. Basically, anybody that was short Home Depot was trying to shake out the weak hands. Fortunately, I was able to hold on. I knew this thing was going to fucking break. And it hit, it kept hitting the top of this parallel. So after about 2 days of hitting this top trend line right here for resistance, it finally sold off Wednesday night along with the rest of the market. And now this thing is finally heading lower. And you can see here, it put in a pretty much a topping tail on Friday. So that's it. It's over for Home Depot. I believe this thing is finally going to make its next move down. How far down is it going to go? I have 320 as a final target. So how do I get that? Basically from this very high right here at 439, so call it 440, down to the neckline, which is 380. So 380 from 440, that's 60 points. So 60 points from 380. So that should take it to 320. All right. When it first broke the trend line here, it had a very fast move from 380 down to 344. So that was pretty big move. So now we can say that this is going to go from this, let's say from this high here, 398. So call it 400. 400 to 345. So that's 55 points. 55 points from 370. 55 points. That takes it down to 315. So it's very likely you can get to 315, but there is some pretty good. Let me go to a weekly. Let's see, the 200-day moving average is at 337, so it'll probably bounce there. All right, there's some support here. But if there is a continuation in the selling in the markets, Home Depot can certainly get down into the 3.25 or less. We'll see what happens. But definitely Home Depot has more downside to go, in my opinion. All right, so I want to talk. I've already talked about a few of the other tech stocks. Netflix. I want to talk about Netflix and Oracle. Netflix also has a head and shoulder pattern that it finally finished off. All right, so I'm going to get rid of this upper trend line right here. We don't need that. We don't need this anymore. We don't need that line anymore. All that matters is this one trend line right here. So this is a weekly pattern now. You have a head, shoulder, head. All right, so there's a lot of head and shoulder patterns in tech stocks, guys. There's one in Apple, one in Microsoft. I just showed you one at Home Depot. Granted, Home Depot is not tech, but there's definitely head and shoulders, popping up on a lot of charts. And Netflix finally broke. It closed below this trend line, all right, which is the neckline of the head and shoulder pattern. Now it had a huge reversal back in March 10th. It came. First of all, it had a huge sell-off basically from March 5th. Right, it sold off big time that week. Came into a pretty good level of support, and then there was a lot of buying up to 1,000 points. This is when JP Morgan came out with that stupid report to basically push it up to $1,000 so they can sell off whatever they owned to anybody dumb enough to buy it at that price again. And since then, it basically sold off, and it finally broke the low on Friday. So I expect Netflix to come down at least to 806 to begin with, but it's definitely going lower. All right, so we got from 1,067 to the neckline right here, 847. So that's $220. So $220 from here, from where it broke the trend line, $220 from here. That takes it down to $648, guys. Yes, Netflix is going back down there. All right, look at this on a monthly chart. Look at the monthly chart. First of all, it put in a huge topping tail right here in December. I'm sorry, in February, okay, along with a lot of other tech stocks. And it sold off big time in January, and a little bit of a reversal in March, and now it sold off again. So that's it. Once it loses this resistance, let me switch to a arrow. All right, it's holding at the pivot low from last month in February. Once it breaks that, it's gonna come back down to 8.25. There's some resistance here, and then that's it. Once it breaks that, once it breaks 8.25, it's going down. Look at your 20-day moving average, $690 on a monthly chart. As you can see, there's some support right here at 680. So what did I tell you guys it was going to? 200, let's see, 167 down to 220 points. So 220 points from 870. So 650. Yeah, I'll call it. All right, 650. We'll call it 650. So wherever, let's see, monthly chart. So this is at 687. There's support here at 699. So who knows? I mean, there's some support. Big support in that area, obviously. Does it get lower than that? We'll see what happens. I mean, it's not going to go there in a straight line. It's going to take some time, I think. But basically, it's got heavy, heavy, heavy support at 750. So what's going to happen is, if I go back to a weekly, all right, it'll probably sell off Monday, Tuesday, and possibly Wednesday this week. All right, probably make its way down to $780, and then it'll get a bounce. All right, it'll come back up into this area, maybe 8.25. All right, so once it breaks 8.25, it's coming down to 780, and then it'll probably bounce back up again a little bit and then fall further. That's what I think is going to happen. So that is my opinion. And by the way, guys, none of this is financial advice. All right, none of my videos are meant for financial advice. It's just my technical analysis on the charts. But I definitely see Netflix falling to the $800 mark and eventually making its way lower. All right, so that's Netflix. Oracle is heading down lower as well. Oracle had a huge sell-off from the highs, and it broke all these trend line supports that I had. So Oracle is definitely making its way lower. It's into some really good support. There's a lot of support right here for Oracle. So we'll see what happens over the next few weeks. I wouldn't be surprised Oracle to bounce first. Maybe a little bit more selling. I don't know if it's going to go all the way down to the 106 area. Before there must be some bounces before it gets there, but it's going to eventually get there. AVGO, this was one I was trading this week too. This had a massive sell-off along with NVIDIA and all the other semiconductors. All right, if I go to a daily chart pattern, I want to show you guys this. Once it broke below this trend line, I knew it was going lower, but it's into some decent support right here, along with semiconductors and NVIDIA. So we'll see what happens with these. I do expect them to fall lower, but basically, it's not that bad because look at it. If you look at where it was in the beginning of December, and it went from 160 up to 250 in basically in 3 weeks. All right, December, it went up 100 points in a month, and the last 3 months it just gave it all back and then some. All right, so that's it's all hype, and the money's just coming back out of the market. So but I believe these semis are going lower. JP Morgan and American Express, all financials are getting crushed. The banks are getting crushed. And so I think JP Morgan has lower to go. JP Morgan does have earnings on Friday. So we'll see if it gets a bounce back. But, JP Morgan had a high. It topped out at 280, sold off to 224. So that's a $55 drop. Then it made its way back up to 255. So $55 from there. I expect JP Morgan to hit $200. From there, I don't know where it's going to go. So we could see JP Morgan make its way down to $200 before earnings, and then maybe it'll get a bounce after earnings. All right. So you see there's resistance on a monthly chart at 206. So I expect it on Monday, probably tomorrow, to sell off to $200. And then, like I said, we might get a bounce from there. But eventually, I think it's going lower. All right. How much lower? Right here, 170-ish dollar. Okay. American Express, same thing. It's been selling off with the rest of the financials. And let me go to a weekly. It's a little bit easier to read. So you see on a weekly, all right, it topped out at 3.25 and at the last earnings report, all right, it sold off. So from 326, it dropped all the way down to 254. So that's what, 75 points. And then if you measure back up from this high right here 2 weeks ago, 75 points from there, 282. This is coming down to about 282 minus 75. So close to 200. I mean, right there. There's your 200-day moving average. So MX has got more to go, just like JP Morgan and the rest of the financials. SoFi sold off. I've been talking about it heading down to the $10 range, and look at that. It hit $9. Wow. What a sell-off. I mean, I've been talking about this, but, markets had a bit of a rally for a few weeks over here, and then it finally gave up this week. So 3M, this thing's driving me crazy, guys. I mean, this thing looked like it was going to freaking break out from its resistance, make new highs right here. Like, it looked like it was going to break out here, like right here. It topped out, on January 31st, it looked like it was going to break out. Then it sold off. Then it went sideways, came into the 50-day moving average, came back up, looked like it was going to break out again, sold off again, came into this trend line support right here, right below the 50-day moving average. Went back up sideways again, right? It looked like it was going to go higher, and guess what? It reversed, and my God, did it reverse. So, it's back into the parallel channel that I have, and it's below the 200-day moving average. Now, the question is, how much lower does 3M go? It's at a 50-day on a weekly, so that's got some really good support here. So good enough to get a minor bounce, maybe back up to the 140 range. I don't think we're going to make anything higher than that, and then we'll probably see it drop lower. So that was a loss for me on 3M. UPS, I talked about this a couple of times in the last few weeks. All right, and so it sold off over here when FedEx had earnings. And the funny thing is, FedEx dropped that one day, and that was it. It went back up. It recovered all of its losses, but UPS just sold off, and it's been selling off ever since. And it broke below this long-term support that I have. I mean, on a monthly chart, this trend line goes way back to 09. Right? So from 09, the lows in 2009 to the low in 2020, and it broke below. So my guess is, I mean, there's a ton of, it already broke through most of this support here. So if it goes any lower, then we're heading into the mid 70s basically. But I think it should hold at around $90. If there is continued selling, I think we'll probably see it bottom out around $90 and then maybe make its way back up. We'll see. If not, it'll make a minor move higher and then fall. I thought it was gonna, bounce off the 200-day moving average here and then head back up to 130, but that it failed. It got to 124 and then it just returned. So we'll see what happens with that. I want to talk about Costco and a couple of other charts. So Costco is a retailer that has been very, very strong. It basically over the last, since 2018, has been on a huge upwards move, right? So, but if I go from the lows here in 2017, so this was 147, up to the highs in January of 2022, 620. Wow, that's huge. And then it dropped. So let me see here, 2017. So 150 up to 610. That's 460 points, just about. 410 plus 460 That's 870. This thing made its way all the way back up to 1,078. So my opinion is Costco is way, way, way overbought. A lot of money went in there for safety, but I think that has ended, and I think it's finally starting to reverse. So it already sold off last month. All right, you can see a huge. It basically topped out in February, right, with the markets, and it kind of went sideways a little bit. Then it sold off last month in March, right? Came into the 50-day moving average on a weekly, made a little bit of a move higher, right, and then it topped out. So here, this past week is a topping tail. All right, so there was a topping tail in Costco and in Netflix, I believe. I just showed you guys Netflix, but that to me is a sure sign that this is selling lower. All right, and here you go. So I'll tell you where it's going from the highs, 1,080, call it, down to 884. So that's 200 points, similar to Netflix. 200 points from 995. That's going to 795. Where's your support? It's probably going to end up somewhere around here. Okay, which coincides with this low right here from August 2024, and this pivot high right here in March of 2024, and this trend line, if I continue it a little bit further, so at some point, probably in August, it's not going to happen right. I mean, I don't know. If the markets have a huge panic, then yeah, this thing can just drop right down, just like everything else in the last couple of days, last week. But I think this is definitely going lower. So there's some support, at 874, but it already pierced 884 twice. So I think it's going to cut through the 884 level real fast and make its way down to 800, 815, 800, right? And then it's gonna bottom out somewhere around here. And then we'll see what happens. If things get really, really bad, then it's going to continue selling off. All right. But definitely, I expect to see Costco much lower. All right. And then similar with Walmart, if you look at Walmart basically was the start of, that was when the market started selling off a little bit. A similar pattern, right? There you go. So Walmart has more to go. And what else do I want to talk about? Let me see. There was something else that I was considering looking into. Oh yeah, Lilly. Let's talk about Eli Lilly. Eli Lilly, this is healthcare. All right, so healthcare has been kind of like a safe spot for money rotation from tech into healthcare. All right, but look at this pattern right here. This is very, very, very similar to the SPX pattern. In fact, I want to show you guys something. All right, I'm going to bring in, there's the SPX. All right, so let me go to a weekly chart on the SPX. And get rid of all of that. And let's bring this over here. All right, so look at this pattern here. Let me make this a little bigger. All right, so you see similarities like, okay, December 9th or December 2nd right here. And this is, what the hell is that? I can't tell, come on. This is going back to September. But look at the similarity in the pattern here, all right? I mean, I think I need to do a daily on this. It kind of looks more similar. So you had all these highs here, and then it sold off. You have all these highs here, and then it sold off, and then it rallied, and then it sold off again. So you had your highs here, sold off, it kind of rallied, and then it sold off again. So I think, let me go back to a larger screen. And of course, I'm running out of time again. So I'm going to end it with this, guys. So Eli Lilly, head, shoulder, head. I believe Eli Lilly is selling off after this. So don't be surprised to see Eli Lilly at least into the $600 price point. More analysis on that later. Thanks again, guys. Please hit that like button and subscribe to the channel if you haven't done so already. Thank you so much. Take care.